Hello and welcome to today's program, Global Connections, as the World Affairs Council of Greater Houston hosts a conversation with David Michels of Kinder Morgan. I'm Sandia Bayou, Chief Development Officer here at the World Affairs Council of Greater Houston. It's our hope that you, your families, colleagues, friends, everybody are staying safe and healthy. Viewers, please use the Q&A tab. I will be monitoring that throughout the conversation, and either I bring those questions into the dialogue or hold them towards the end. Again, use the Q&A tab at the bottom of your Zoom screen. Now more than ever, it is important to stay informed about what is happening, not only in our city, but around the world. The World Affairs Council of Greater Houston brings foreign affairs experts right into your home, and David is one of them. David, welcome.
Well, thank you very much for having me. The more I learn about the World Affairs Council, the more I'm appreciative of it. The world continues to be more and more flat, and I think in this telecommuting remote world that we've all lived through for the last year, a platform like this one is one that is, I think, increasingly important, so people can understand the economic and political ramifications of kind of a more closely intertwined world community.
Absolutely. First thing first, how are you, family, team of Kinder Morgan currently doing in the given circumstances?
Doing well. My family and I are doing well. The Kinder Morgan team, which has proved to be quite resilient, is doing great. A year ago when we said we were going to work in this remote environment, there was a lot of concern on whether or not we'd be able to achieve everything we wanted to achieve and complete our just daily functionality, closing the books remotely and reporting our earnings calls remotely and reporting our 10Qs and Ks remotely. Now that concern is completely erased. And in many spots, our firm is actually more efficient in this environment than less, which is excellent. The firm's count of employees and contractors who are having COVID-19 positives it continues to decline, and we're recording increasing numbers of our colleagues who are getting their vaccinations.
That's wonderful. And we'll touch a little bit more on this a little bit later in discussion. Again, glad to hear that you're doing well, family, and everybody in your team. So first, just a refresher for our audience, the name Kinder Morgan is almost synonymous with Houston Energy. You are an energy company, but you operate in the midstream, primary business and energy infrastructure. Could you explain a little bit what actually that means and what is exactly that Kinder Morgan does?
Sure. So for those who aren't familiar with it, I think it is worthwhile to kind of go through upstream, midstream, downstream. The upstream space is generally describes those who produce oil and gas out of the ground. The midstream part of the energy industry is the group that gathers, transports, stores, oil and natural gas after the producers have produced it, and then downstream are the group of companies that facilitate consumption, deliver and facilitate consumption among the end users. So as a midstream company, we generally own pipelines. We own storage facilities that move and handle other people's commodities. Mm-hmm. We're one of the largest energy infrastructures in America. We own 83,000 miles of pipeline. It stretches across the country. We handle numerous products, but we are focused on natural gas. Most of our pipelines and facilities are geared towards handling natural gas. Generally, we don't own the product that moves through our pipelines. It's someone else's product, and they just pay us a fee to move it and to store it. Similar to a toll road, we get paid a fee for allowing people to use our facilities. And in that way, we minimize our direct exposure to commodity prices. In this industry, that's obviously a very big concern because there is such volatility in the price of oil, price of natural gas. So it's a good position to be in if you're looking for stable cash flows. And as I said, we are focused on natural gas more than on any other product, and we think that's beneficial in a lot of ways because we think it's the fossil fuel that has the longest of runways. it's the cleanest, the lowest emitting hydrocarbon. And then I guess one last piece that is important to point out who our counterparties are. And a lot of our counterparties are the upstream producers, but most of our counterparties, most of those who are moving product through our facilities are end users, primarily in the gas utility space. So those are the utility companies that actually deliver natural gas to residential, commercial, industrial, as well as power generators who take the natural gas and put power onto the grid, and then industrial companies who use natural gas and its byproducts as feedstock to make other products.
Thank you. That's most helpful. Again, as I mentioned, Kinder Morgan is the name that most all in Houston really business community recognize, and the Kinder Morgan story is very much a Houston story and a rather fascinating one. Richard Kinder, the founder and the executive chairman of Kinder Morgan, was once the president of Enron and its chief operating officer, and is said to be the guy who made the trains run on time and kept spending the check. I wonder if you could talk about the company's founding, its unique story, and its evolution into the energy giant that it is here today.
Yeah, sure. Yeah, Rich is an industry icon and
Sure.
very important industry, Houstonian and Houston figure. And he was a senior executive at Enron before co-founding Kinder Morgan. In fact, he was up for the CEO role. A lot of your participants, I'm sure, know that he was up for the CEO position at Enron when Jeff Skilling was named as Ken Lay's replacement. Rich thought it was the appropriate time to move on, and we know how that ended up.
Yeah.
Enron's story was quite different than Kinder Morgan's. And I think there was a fundamental difference in perception there too, in terms of how to run the business. Enron went down the path of asset light, trading heavy, lots of risk, and Kinder Morgan is asset heavy, risk light. We don't have trading businesses, and instead favor long-term contracts with customers, steady cash flows. So I guess the founding of the company was really in 1997 when Rich and a colleague of his, Bill Morgan, started the company, and they actually, ironically, bought a pipeline from Enron. That was the first asset in the Kinder Morgan family. It was a refined products pipeline. They were also, I think it's important to point out, because this is so important to the midstream space and its development over the years. Bill Morgan and Rich were both pioneers of this master limited partnership structure in which a number of these midstream assets were placed. Generally speaking, midstream assets are lower on the return side of things, on the return spectrum. Upstream oil and gas, lots of risk with the direct commodity exposure, but also lots of potential for return. Midstream, because it is so consistent, is generally lower return. But when this master limited partnership structure was introduced, it offered the opportunity to take those lower returning assets, more stable cash flow generating assets, and allow for a valuation arbitrage to be created between the general partner and that entity. The characteristics that allowed for that were, tax efficiency. The master limited partnership generally doesn't pay taxes, and also it has a requirement to pay out the vast majority of its cash flow, similar to a REIT in that regard. And so those characteristics allowed for these vehicles to achieve premium valuations, which supported significant growth, the growth through acquisitions, growth through organic development over the years. And Kinder Morgan was no exception to that, and in a lot of ways led the way. They made several transformative acquisitions over the years and spent tens of billions of dollars in organic development to extend their footprint and the infrastructure. So bottom line, they grew a company that was about $300 million at the outset, about 175 employees, to now one that's worth $70 billion, and we have over 10,000 employees.
Wow, what a story. Congratulations.
Yeah, it's a fun ride.
Absolutely, and it still keeps on going. So again, congratulations. Sounds like you're very strong position and even getting even stronger. If you don't mind, I would like to talk about you a little bit and your role at Kinder Morgan, as well as career path that led you here. As CFO and vice president, your job is very different than the geologist or engineer. You must be the one who is up late at night these past several years, as we have seen the markets rise and fall continuously. Can you talk a little bit more about what it is that you do and how you got there, perhaps? And what's it's like managing energy finances through such a volatile time?
Right, right. Not unlike other CFO positions in the industry, the groups that the functional groups that report up through the CFO office here are tax, accounting, investor relations, the treasury group, financial planning, and each one of those has had to pivot in the face of a lot of the volatility that we've seen, whether it's incremental accounting standards that have come out, the market, and having to react to the market in terms of changing our messaging. Financial planning, of course, has had to move significantly. And that's part of what makes the job challenging and rewarding too. It's been fun. And I have to give a lot of the credit to my team. We've got some very highly capable, dedicated, smart individuals that I work with, and the success that we enjoy here is absolutely a team effort. I think the one area where I think it's the most apparent where we've had to pivot in the past is on the investor relations side, and the messages that we've promoted and put out there for our investors. Well, first, let me touch on one thing that it's interesting throughout all of the volatility that we've seen in the space and in the regulation, the federal regime changes since I've been here. One thing has remained really stable, and that's the way that we run the business and the key strategy tenets that we use to run the business. The same management principles, frankly, that Bill and Rich started the company with. We focus on assets that are core to the energy infrastructure space. We look for long-term contractual commitments from counterparties. We're focused on capital discipline, and we're focused on being a low-cost operator. And I think a couple of supporting facts around that low-cost operator side is, we don't have private planes. We don't fly first class. If you're lucky enough to have some points built up, you can get yourself upgraded to economy plus, and you'll be flying in style. But we don't have stadium naming rights, and our CEO and chairman both make $1 a year. So we are focused on keeping costs low. We think about it as the shareholders' money, not ours, and we treat it that way. So a lot of those trends have stayed the same. Those founding principles have not changed, but to provide some indication of what has changed and how we've pivoted over the years. On the investor relations side, fluctuating market conditions have led to investor sentiment and investor focus over time changing. In the past, investors have focused on our ability to grow, looking for that capital appreciation. So that was paramount for many years when we first started out in this company. At times, it's shifted to cash flow management, balance sheet improvement, and currently, I think it's pretty easy to say that for the last half year at least, investor focus has been on energy transition and our ability to participate in that, and how that will influence how that will allow us to participate in the energy industry going forward. So we've pivoted our messaging and interaction with investors over the years to just help them understand our business in those different lights. So it's been very interesting to see that messaging evolve, but also in the same way, a lot of our steady core principles haven't moved.
Wonderful. Talking about the relationships in the industry, David, you came to Kinder Morgan through a relationship forged during its acquisition of El Paso Pipeline Partners, the $38 billion deal. That was the largest energy deal in 2011 and the second largest for industry that year. At the time, you were the vice president of Barclays, which provided funding for the deal. And today you are, as we know, VP and CFO of Kinder Morgan organization. Looking back on how you joined Kinder Morgan family through the El Paso pipeline deal. Would you agree that relationship in the industry are important and very, very critical?
Without a doubt. Yeah, I think it's interesting the way that I joined Kinder Morgan. Very fortunate, frankly, but the background in investment banking, out of business school, I was really looking for a challenging career that had an accelerated learning curve associated with it. And any of our participants who have had any experience in that area know you get it in spades in investment banking. It's definitely a lifestyle of extreme when you're working in that environment. And in the years that I was in investment banking, the energy space was going through the shale development revolution, which turned out to be just a really spectacular time to be involved in that world. The revolution of the shale development really turned a lot of the energy industry on its head, particularly infrastructure. Mm-hmm. So, infrastructure has always kind of been the sleepy, low return part of the business. But for decades, the traditional supply areas in one part of the country were, supply in Texas and Gulf of Mexico. That's where a lot of the supply was generated. And the demand was, primarily northeast, in New England, Boston, New York, and so forth. And so a lot of our natural gas pipelines were designed to flow gas that direction and take it from the source fields to the demand area. And so we had many large natural gas pipelines that were designed to move it that way. Then we had this Marcellus and Utica shale foundation and revelation and development. And those shales are New York, Ohio, West Virginia, Pennsylvania. And so they were only discovered really 15 years ago. And it's amazing to think about that because in 2005, there was little or no development out of those shales, little to no development out of those shales. And today it's the largest natural gas producing region in the country and has been for many years. It's incredible how quickly that came to fruition.
Absolutely. Absolutely.
Yeah. And as a result of that this plumbing had to change. So these gas pipelines that moved from the south to the north had to turn around. Mm-hmm. Take that excess supply and bring it to the south, which is now where we have liquefied natural gas facilities, which are consuming north of 10 billion cubic feet a day. Now that it's recovered from the 2020 impacts, we've got petrochemical facilities that have been increasing in significant ways over the last few years, and we also have exports into Mexico of natural gas to help with their natural gas needs. So the demand center has moved, mm-hmm. and the supply center has moved. And during these years, when I was in investment banking, that was enabled by financing, lots of transformational acquisitions and divestitures. And so it was an exciting time to be in that business. And during that time, that's when Kinder Morgan was also going through a lot of its growth activity, and became one of my largest clients. And as low-cost operator, it's not too surprising that I think they thought it would be cheaper to just hire me directly than to continue to pay those investment banking fees. So, I was brought over in 2012, right as the El Paso Corporation acquisition was being closed. I was originally put in charge of in the investor relations group, and was promoted in 2018 to CFO. So, to answer your question, yes, developing relationships based on trust and respect are extremely important, certainly to this industry, but generally, I think across all aspects of life.
Absolutely. I completely agree with you. It's no secret that 2020 was a tough year for everybody, for most of the industries, including Kinder Morgan. You reported a loss in the second quarter, coming out a fairly difficult 2019 as well. But then you posted a third quarter profit. And by the end of the year, you were still profitable. This had to involve some very focused and disciplined financial management. And we have really heard some of those notes already. Would you care to talk through how you did this?
Yeah. 2020 was for I think everybody involved here is challenging in so many ways, personally, professionally. the business. The two big challenges for the energy industry and for Kinder Morgan were, one, the global lockdown, which diminished demand for refined products and for all kinds of products that we touch. But also, what's lost sometimes is the fact that we had this worldwide war on oil and oil prices. OPEC and other parts of the world were debating at the time on the appropriate amount of OPEC supply to come to the market. And as a result of that, there was a significant reduction in the price of oil coming out of towards the end of the first quarter of last year. And then I think everybody probably remembers this. In April of last year, those already depressed oil prices went through further turmoil as a result of nobody driving, nobody flying, and a significant demand reaction, which drove those prices negative. They actually were negative $37 per barrel in April of 2020, and first time that's ever happened.
Yes.
So those, we kind of refer to it as a double black swan event, because we had both of those. We had the demand destruction for a number of our products, but we also had the significant oil price volatility. And how that translated to financial impacts to us, drilling activity in the U.S. declined significantly. The rig count decline was the steepest we've seen in decades, and that led to lower oil and lower natural gas volumes being produced, and therefore less volumes coming through our facilities on which we rely on for revenue generation. In addition to the natural gas, we transport and store refined products. And so, and those refined products are gasoline, diesel, jet fuel. And as a result of the lockdown, those products declined, and the movement across our facilities declined. So the revenue impact we got from those assets also impacted us. Overall, for 2020, our EBITDA was down about 8% relative to what we had expected. And so, in the face of this double black swan scenario, that's not too bad. For us, that's a significant miss because our business is extremely steady. On our EBITDA of $7 billion, normally if we have a 10 or 20 or $30 million change, that results in a lot of explanation, and it gets called out. So an 8% move was quite unusual and really kind of surprising. Despite the circumstances. As a result, we focused on taking a step towards additional cost cutting and mitigation. We went through an organizational efficiency effort. That culminated in the beginning of November, where we announced many changes to our organization to not only save some money, but also create a more efficient structure. Overall, we think that structure is now going to save us about $100 million a year. That was useful. An example of what we did there was we centralized a number of groups whereas before we had those individual groups were represented across our business segments individually. So we had a little bit of redundancy there. By centralizing those, not only do we increase the efficiency of the resources that we have, it also allows us now to better share best practices in things like pipeline integrity and project management and engineering. So, I think it's going to be good for the company for the longer run. In addition to just saving some money, it's going to create some efficiencies and some effectiveness improvement. So the performance in the second half of the year did benefit from that effort, but it also benefited from the fact that we started seeing some green shoots. The economy had not and still has not recovered back to pre-pandemic levels, but it definitely started seeing some green shoots, and that aided our financial performance in the second half of the year.
That's great. Obviously, COVID-19 continues to be one of the central themes in our discussion and many others that we are having separately, although things are, as you said, starting to turn around, and I think noticeably so in the last month or two, feeling some traction. Today, the world is still dealing with the impact. I didn't really ask, how did you and your family manage this past year?
Um, Pretty well, all things considered. My wife and I have 3 kids, and probably more luck than anything else. None of us have had COVID that we know of. My wife and I have had our first 2 vaccine shots now, and in fact, partially I assume due to the masks and distancing from others, is the entire year none of us got sick. We didn't get colds, we didn't have illnesses, and so there was something to that. So that was a first for our family. And I think I think on the challenging side, the switch to virtual schooling last year was a major challenge. And with anybody on the call who has kids, it didn't work very well out of the gate. By last fall though, my kids' schools educators had done a really fabulous job accommodating education in that environment that also kind of protected them appropriately. Really big kudos to the educators managing through this. It was a real challenge. As far as Kinder Morgan, I know early on when the senior executives were discussing in mid-March, the first time we decided we needed to send the employees home in our Houston building, it was because we had discovered a case. One of the employees in our building tested positive, and we knew we needed to take action right away. So we asked everyone to go home. That was on a Saturday. So we asked everyone not to come in that Monday. We'll be out for the week, and then we'll play it by ear. There's some possibility you'll come back in the next week. We didn't, and we did that week by week for several weeks before turning to monthly decisions. And now it's kind of a remote until we have a plan to come back in, to phase back in safely and efficiently. And then longer term, we're still working on what our permanent work structure looks like. Is there going to be a hybrid type structure or
absolutely,
or not? We're still working on that.
Yeah, and we hear very similar conversations, and we also gathering the facts and to see how best proceed to make sure that we stay loyal to members, viewers, participants, and and providing all those opportunities in the safest way possible. Kind of looking back at the industry, looking at the industry, what is your feeling? Do you think we are past the worst of the crisis? Kind of what are you telling your investors at this time?
We are confident we're past the worst of the crisis, and that's what we're communicating. There are definitely challenges that remain that we need to overcome, and internationally, I think the U.S. has done I think there were some stumbles early on, but I think we're now hitting a stride with regard to the vaccination rollout, and I think that's key to people getting confident to really getting out into the public, which is key to demand for energy and energy products. Clearly not over, but we're seeing green shoots. And if you recall the first and second waves of the pandemic, I mean, we're well away from those highs, and now we have the substantial tools available to treat and not only prevent but also treat cases. So it feels like the crisis is in hand. Hopefully, it doesn't get out of hand again, but it's within hand. So what that means to our investors is, we expect the demand for our services and products to rebound nicely this year. We've forecasted that, and that's what our communication to our investors were at the beginning of the year. Still expect that to be the case. I think the first quarter was probably slightly less than what we had expected in terms of the recovery, but not entirely out of line. And so by the end of 2020, we actually expect demand for many of our products to be back to pre-COVID levels. Not for jet fuel. We still think that one's going to be a little bit behind, take a little bit longer to come back up. But for many of our products, end of the year, we think it'll be largely in line with normal levels. Yeah, so that'd be good.
Yeah. As you've described, and we know that you are primarily a North American pipeline and infrastructure company. We, World Affairs Council, are a globally oriented organization. Can you talk about how your operations intersect with the rest of the world? And we know they absolutely do. How you are connected globally and how geopolitics perhaps affect Kinder Morgan?
Yeah. When I was first asked to participate in this, that was I wonder if they know how much interaction we have. So we do have quite a bit, even though our assets are nearly entirely US based and our revenue generation are nearly entirely within the US. Our assets and our businesses are absolutely linked to an international market. And we're increasingly connected to the global marketplace. In a number of our business meetings, it's not unusual for us to spend large amounts of time focused on the international trends, supply and demand dynamics. There is an increasingly strong demand for US hydrocarbons to be exported to other parts of the globe. And so we facilitate the movement of those hydrocarbons that then get supplied and meet the demand of other countries. The majority of that growth is to supply liquefaction facilities, natural gas liquefaction facilities. We own one of those facilities. The rest of those, we just have pipelines and other facilities that support others' plants. But we supply LNG to primarily to Europe, Asia, and South America. But it's an increasingly important part of the U.S. natural gas production landscape. An increasingly large percentage of what we produce in terms of natural gas in the U.S. is going internationally. It's not being consumed in the U.S. And of course, we help facilitate that delivery. One note on that topic, which I think is also topical, is the U.S. has been consistently reducing our carbon dioxide emission levels since about 2005. And in fact, the emission levels are down about 14% since that time. And to put that in perspective, the U.S. Emissions are now at levels that we last saw in 1990, despite significant growth in population, growth in energy demand domestically. And that's largely resulted from us replacing coal plants with natural gas power generation facilities. Our coal power generation represented about 50% of the U.S. overall power mix in 2007, and today it's down to about 23%. On the other hand, the reason I bring that up is because I think it's why LNG is becoming such an important global player. China's power consumption is represented by about 65% coal today, and in India is almost 75%. So great opportunity for them to attack their emissions using natural gas, whether it's from the U.S. or other parts of the world. But we have stable supply. We've got infrastructure in place. We've got a steady capital and legal system to support all of these transactions. And so it's a good way for other countries to efficiently reduce their emissions without impacting their ability to meet growing power demand and growing energy demand.
Absolutely. Very, very well said. A little bit back to energy transition. I'd like to speak about a topic that is making headlines these days. Let me give a little bit of context. First, back in January, on Kinder Morgan's earnings conference call for 2020, your boss, Richard Kinder, was of course very positive, and he spoke of a strong cash flow, but then he also spoke of a world that is transitioning to a future of lower emissions, as we just mentioned, and he said that Kinder Morgan is well positioned to participate in that transition. Then, even bigger news, just about a week ago, it was announced that Kinder Morgan has formed a new energy transition ventures group to, I quote, identify, analyze, and pursue commercial opportunities emerging from the lower carbon transition. These are very, very big news. What can you tell us about this new group within your company and globally? How big and how significant is this energy transition that we're hearing more and more about?
Right. It's a great question, and it's front and foremost in terms of what we're looking at focused on. How do we play a part in the energy transition, which is, it feels like it's inevitable, it's happening, and so now it's just a matter of how are we going to participate and maintain that we have a fruitful business for years to come. It's a great question, and honestly, we don't have a great answer just yet with any precision, but we have lots of very talented people working on it, and there are some clear near-term answers, but I think the longer-term answer and the scalability of it is yet to be made. Right now, what we think is important to us and to our shareholders is to put the appropriate foundation in place to ensure we don't miss opportunities and we're not overlooking risks. So we have a clear focus on the trends in our business reviews. We publish a sustainability report annually that we have senior level managers across the organization involved in, so that we can make sure everyone is thinking through these issues and opportunities. And then, of course, as you mentioned, we have our new internal team set up to be dedicated to identifying these new low carbon energy opportunities. Our business units regularly evaluate opportunities within their business areas. And so we don't feel like we're missing much there, but we knew we needed a bigger dedicated resource team scouring the landscape full-time outside of our traditional business lines, because we think there are going to be some good opportunities for us to participate in the transition in those spots. And we needed dedicated resources to do that. We're hopeful we're going to be successful there. We are hearing some interesting opportunities already, but it's still early. So, if I could,
stay tuned.
Yeah, stay tuned. And I think just to provide a little bit of an overview of where we're looking and what kind of opportunities are on the horizon. I think it's first important to point out that hydrocarbons are still a very important part of our civilization and aren't going to go anywhere anytime soon. Our country and our civilization requires a lot of energy, and about 80% of that is met with hydrocarbons today. And there's an overwhelming amount of infrastructure worldwide that logistics, installed facilities that are needed to meet the economic needs, but also the efficient delivery of energy worldwide. And that doesn't just get replaced overnight. I think there will be parts of it that'll be phased out appropriately, but it doesn't go away overnight. So we don't think that there's a need for us to turn over our business wholesale overnight. Instead, we'll be shifting in parts and looking for opportunities. In terms of kind of near-term opportunities, we're focused on things that we can do to enable the energy transition without turning over our assets or putting a significant amount of capital into things where it's unclear where the future will be. So, for example, renewable natural gas is a commodity that comes from naturally occurring methane. So wastewater treatment facilities, landfills, agricultural facilities, where you can capture the methane that's naturally emitted from these facilities, treat it, and then put it into a normal natural gas pipeline, and it looks like the same molecule as a natural gas molecule that's produced out of the ground. So that's a great way to do it, because you're capturing emissions effectively and replacing produced natural gas with this renewable natural gas. We have a number of facilities that are hooked up, and we're looking at opportunities to further develop that. We're also focused on responsibly sourced natural gas, and that's natural gas that is produced by production companies, shipped by midstream companies like us, and are handled by downstream companies who are also part of a community called One Future, and we're committed to an emissions intensity level of less than 1% across the value chain. So less than 1% of all of the molecules that we touch across the value chain is released into the air. That's our commitment, and our part of that is just the transmission piece of it, and we're well ahead of our portion of that commitment. So that responsibly sourced natural gas movement is one that we think will become standard, and so further helping us and our consumers to reduce emissions along the footprint. In the medium term, so those are nearer term opportunities. In the medium term, I think carbon capture and sequestration is an area where we could play a larger part as a company. A lot of people don't know this, but we currently have a fairly large sequestration of CO2 business today. It's just not the one that it's not the type of sequestration that people look to. We actually capture CO2 that's produced out of the ground and we inject it into oil fields in West Texas as a way to enhance oil production. So it's a carbon neutral effort that we have going on right now. But what that could allow us to do is take that expertise and knowledge of sequestering CO2 and then apply it to areas where we're capturing from large industrial facilities and then sequestering, which would actually be a carbon benefit to the environment. And so we're looking at ways to make that economic and profitable. And then longer term, an interesting low emissions or zero emission fuel source for many different applications could be hydrocarbon. And hydrocarbon is one that would mix very well with our natural gas facilities. There is some work we would need to do on our pipelines and storage and compression facilities in order to accommodate hydrocarbon, but there is a real possibility there. So if you see more power generation or hydrogen used as a feedstock for other products, it could be a real opportunity for a midstream company like us who has a lot of natural gas assets. So there are a lot more, but those are some of the things we're looking at.
Yeah, certainly the future of energy, or energy as we have known, is definitely shifting, and all these various new innovative ways that we are learning about, and I'm sure it will progress research and find different options as well. In all of this, and what are some challenges perhaps that you were concerned about also, and as this new phase of development and new ways of doing business, new ways of sourcing energy? Any challenges that you are concerned about?
Well, there are certainly, I think the biggest challenge staring a lot of energy companies in the face is if companies are really successful in transitioning away from hydrocarbons, traditional hydrocarbons, and you have assets or production facilities that can't shift or are not technically capable of shifting over to the new products of the future, fuels of the future. Having stranded assets and having write-offs and a diminished business line, that's the real big risk here. Without being able to shift those or transition those assets into the new fuels of the future, economy, then you could have a diminishing business, and that's a risk to us and our shareholders, which is why it's so important, and we're putting so much focus on it.
Thank you. We do have a question, actually. How will the recent freeze and likely resulting changes to natural gas transmission impact midstream?
That's a great question, and it's very topical for all of us in Houston. I think most of us lost power and enjoyed no power during freezing temperatures for a number of days.
Yeah.
I think there's, as everybody who lives around here knows, there's a lot to play out, and there's going to be a significant amount of investigation to determine exactly what went wrong and finding those problems that were existing in order to understand how we're going to fix and remedy those problems in the future so we can avoid it permanently going forward. I think how it will impact the midstream space in Texas is likely to be that you see more power generators sign up for firm supply, firm storage. Natural gas power generation is a dispatchable power generation form. Coal, nuclear, natural gas, those are dispatchable, meaning it's not reliant on wind or solar. And so what it is reliant on, though, is for natural gas, having the gas available to it. And as many people know, there were wellheads producing natural gas that froze off. There were treating plants that had functional problems in the extreme weather. And so having storage nearby producing facilities and having firm transportation for that natural gas on pipelines is going to be more and more important for power generators to secure. So I think that's generally probably an uptick a little bit for demand for capacity and services like the ones that we provide. It's a great question. We'll see. There could be a lot more too. We'll see.
Yeah. David, mentioned to you in our previous conversations, all the work that we do with high school students, university students, and they're very active participants and do internships with us. And in preparation for this dialogue with you, I actually had asked some of our active student members to submit a few questions for asked on your behalf. So next few questions come from them. Joel is asking, who do you look up to as a source of inspiration?
It's a good question. I've got some. I've got two parts to that answer, I guess. First, I think that for me, when I'm going through challenges professionally, I look to historical figures and people who face some of the greatest challenges of all time for inspiration. I've read a lot about Abraham Lincoln and Winston Churchill, and I think those two really stand out as individuals who were graceful in the face of adversity. In modern life, this is a little bit biased because I am an employee of the company, but I gain a lot of leadership qualities by the examples provided by our leadership. Steve Kane and Kim Dang, our CEO and our president, respectively, are just great people who happen to be brilliant business people and run the business the right way.
Ali's asking, what do you consider before promoting someone? So this is for her, perhaps a guidance for their future path to career. So what do you consider before promoting someone? I'm sorry.
Right. So I've had the benefit, the pleasure of promoting a few people in my time here, and I think the paramount thing that's important to me is trust, intellectual honesty, trusting people that they're going to be honest with me, even if there's bad news to be delivered. Trust that they make good decisions, not only business decisions, but with their organizations. They're guiding their people the right way and developing them and providing a source of training and so forth. A high IQ is important, but it's not in my top three of qualities that I would look to for making a promotion decision. It's mostly about trust and my view that individual is going to make good choices for the firm.
Thank you. And the last question comes from Faith. At what point in your life did you really know what you wanted to do with your career?
That's a good question. I'm not sure I know exactly what I want to do with my career still, but I worked at my dad's office when I was in high school, and I worked right under the CFO there, and he was a really impressive guy. And I remember my dad telling me that he was a really highly respected individual. So I think I kind of generated a little bit of an affinity for finance out of that experience. I was treasurer of a number of clubs when I was in undergraduate school, and I have undergraduate and graduate finance degrees. But the question of how and where to apply that skill set or that knowledge base was always a question for me. I was fortunate, frankly, to get experience working with Kinder Morgan when I did, at the time that I did, because I think beyond trying to pick the right industry or pick the right functional group, it's much more important, I think, to pick a company or an environment, an organization that shares the right culture and personal relationships for you, because that's where you're going to really thrive.
David, before we finish our dialogue, we are almost at the end of it. I want to ask if you have any final thoughts that you would like to share with our viewers or us before we bow out for a beautiful weekend.
I think one last item that you asked about challenges, and I think one additional challenge popped in my head. It's for the energy space, since we live in Houston, the energy capital of the world, and it's been a tremendous career and tremendous industry for a long time. I think one big challenge is talent retention and attraction, and so I think the energy force is one that the energy workforce is one that is at least our statistics tell us it's an aging workforce, which is double-edged sword. Great experience and really talented people who work in the energy industry. But on the other hand, you're seeing lots of retirements every year, and if we don't refresh that talent, you could result in that brain drain in the industry that could be a challenge. So it's a real risk, and we're focused on trying to combat that. Our HR department is really talented, and they're coming up with all kinds of different ways to do it. But I think it underscores the importance of us working on this energy transition landscape, positioning ourselves as a company poised to succeed in the future. And the industry, I think, needs to do the same thing. And I think we're all kind of coming to terms with that, which I think will be great for the energy industry and for us. I think it'll lead to new technology opportunities, as well as new forms of service and new low carbon energy opportunities. So it's exciting. There are definitely some risks around it, but I don't think that trend is going to slow or turn around in any time soon. And so it'll be an interesting, challenging time for the industry, but I think it'll be a fun ride.
Yeah. Thank you again. With that, we're gonna say thank you all participants. We're gonna thank you, David. Congratulations on your role. Congratulations on all the successes. Appreciate sharing your personal story, as well as the history, the present, and the vision of the future goals for Kinder Morgan. So again, it's been our pleasure to have you. Again, thank you for your time. Thank you for your wisdom. We certainly all the best, and look forward to seeing you sometime soon in person.
Thank you very much for having me, Sandy. I really appreciate it.
All right.
Thank you, everyone.
So viewers, thank you again for joining us. Wishing you a wonderful weekend ahead. Till next time. Thank you. Bye-bye.
Thank you.